All right, good morning. Yeah, I know my webcam's not working today. Happy New Year. All right, let me get some things going here. I've been trying to get my webcam to work. Hope you had some nice holidays. All right, now I can see the chat. That's good. If you're in the UK, the markets are closed today. Trading volume is at 30% of normal. Shields up, red alert. Yeah, shields up, red alert. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money cannot afford to lose. Hey, 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 hit a boo-boo. Hey, while you're here, please click the thumbs up button. Please subscribe. Please like. Please click the links in the description below. One link is to Amazon.com, where you can leave a review for my book. Wait, do you have audio? Yeah, you do have audio. You can leave a description, or you can you can leave a review for my book. I'm assuming you already have it. It'd be great if you could leave a review. That'd be wonderful. Please do. Took me a year to write the book. Maybe it'll take you less to write a review. Click the link to fxbootcamp.com and join our community. A band of brothers and sisters with razor focus on improving as currency traders. No joke training videos, no joke group, live group trading groups, live group training groups, real people. No joke. And then click on the link to tradersway.com. I believe them to be a trustworthy, ethical foreign exchange broker. They earned my loyalty and respect, not through a banner advertisement saying that they're the cheapest. Hey, they're very competitive in fees. But actually, how they behave in the market, that's how they earned my loyalty and respect. So, tradersway.com, maybe if you open up a demo, they can earn your loyalty and respect. And we will be here. Like I said, there's for some reason I've rebooted everything. I don't know what's going on. Some software somewhere has updated and I cannot get my webcam to work. Something updated somewhere, which means it don't work none. So anyways, good to have you here. Hope you spent some time with your family. They miss you. Let me just delete the video cameras completely. Okay, anywho. So, yes, shield up, red alert. The UK is closed. Big money will not be in the markets today. Did I take a day trip to Cuba? No, but I might go next week. Might be something I do today is buy my plane ticket to Cuba. So yeah, I'll probably go. I haven't done it, but I'll probably go, Peanut Butter Hero. Yep, almost certainly. Yeah, almost certainly. I'll probably book it right after we're done today's video. Okay, the other thing, the UK is closed, so you can see there's no demand for pound right now. Probably explains that. What else going on? I think bonds are down a little bit in the futures market. The stocks are up a little bit. Tesla is down 6% the last time I looked. I'd like to buy it maybe closer to 75% from the top. That might be interesting. Looking at today, the USD is somewhat weak. The yen has been quite strong for a bit, obviously because of YCC, and now maybe the counter move. Aussie's giving back, Euro's giving back, CAD is up. Okay, so this is all a little bit strange. One of the things that was announced last night is that China has removed the quarantine restriction for foreigners visiting. Now, it doesn't get removed till the 8th, but I actually talked about this about 8 to 10 days ago, that this would be the next step to fully opening up China. And so now they've announced that. I believe it's the 8th of January. If you're a foreigner and you fly to Wuhan, that you don't have to be locked in your hotel for days on end. Cool. So interesting. Is there a great opportunity to make money today? I would say that there's a better opportunity to lose money today than make money today, but let's go look. Okay. What would you like me to cover? What are your top needs today? Please type into the chat. What would you like me to cover? Stock market? Would you like me to cover what? Bitcoin maybe? Gold, silver, oil? Euro dollar? Aussie dollar? Okay. Okay. Sure. Oil? Sure. Aussie dollar? Great. Natty? Maybe. All right, that's easy. So let's start with Euro dollar and Aussie dollar. Okay. So this is what I'm thinking. You have to understand my point of view. I did this last week in the swing trading group. Oh yeah, Epic Pen. Okay, so this is what I'm thinking. What do you think? What do you think? You'd have to agree with that assessment, but that's what I said last week. Okay. NP says, well, thinking done for the week, but you could be front running next week and next month. Okay. Like, how many people know? For example, I believe Aussie dollar will be down in January. How many people know that? Now, we don't know if it's true, but the thing is, do you know that that's what I believe? Okay. So, when did I tell you that that move could possibly start? NP says in the first quarter. The actual nomenclature would be by the fourth quarter, or by the first quarter. Not in, that's too, I don't know, vague. Is that the end of March or is that the beginning of January? So it's by the first quarter. Okay. So look at this, right? Now you guys say in January. That is not true, but it's the second week of December. Now, why do I say they could be the December? Because that's the same period in which I am taking profit in this move. So by doing so, that's the beginning of the window. Do you understand? The out is plausibly the beginning of the in. And the second week of December is generally when I'm getting out of dollar short trades. And that gives me the opportunity to start thinking dollar long. It's the same trade. If I'm exiting a short, I'm actually going long. So I have this point of view where somewhere, and this goes back to what NP was saying, somewhere by the second week of December and the first week of January. Okay? And by the way, if you think I'm just making this up, go back 4 years, 5, 6, 7, 8, 9, 10. Go back 12 years ago on YouTube videos around this time, and you're going to get the same message from me. Okay? Okay, so anyways, if that's what you were thinking, isn't it interesting that this occurred there? Well, actually, that's fallacious. The reason this is R1 is because this is the high, the highest high, if you will. That's the math working. So the pivot point's adjusted to show you that that's resistance. Okay? Now, let's take this further. Where's my kill zone? Where's my sell zone for January? So what I'm saying to NP is that you have permission to engage the enemy now. Okay. Now, there might be some volatility before it rocks and rolls. Maybe it doesn't go down to the downside. Maybe it double tops first. Maybe we go all the way to M4 first and then down. Yeah, well, that's the difficulty. I don't know the future. I can only predict the future. Okay. There's a difference. I don't know it, but I can predict it. And if I can predict it and recognize what's happening based on my prediction, then I can trade it. Okay? It's sort of like when this was falling very fast. The world was very bearish. The US dollar was very strong. And what we knew on average, okay, let's see, third week of September is about here. Okay, somewhere in this period, I expected this market to reverse based on trading norms. I'm going to ask you again to confirm or deny this. I want to make sure, A, that you know this, but B, you're actually programming your brain. And I need you to program your brain. So I want you to reach out to your keyboard and type in the English language the words that confirm that we know somewhere in this amount of time, we'll call that the window, that the Aussie US dollar has an incredibly high chance of changing direction until the second week of January. How many people know that? You know that. It's in your brain. I need you to reach out and confirm that you know that. Okay? The next part of that is, when do you recognize that it's happened? It's a key component of success. So this is predicting the future, okay? And then somewhere in here, there's a confirmation, isn't there? You're waiting, 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 waiting. Did you know here it was going to reverse? Did you know here it was going to reverse? Did you know here it was going to reverse? Like, at what point are you in? Okay. Okay, now we just happen to be on Aussie dollar. Does this fit into the model of pivot points? Does this fit the pivot point model? Yeah. Double bottom on support, higher high, higher low, M2. There's the target for the, right? Down to the moving averages. Cool. So it comes down to, when do you recognize it? Okay, great. That's all. Great. And so that begs the question, so to speak, where sometime in this window, I expect the opposite to happen. So I need to see a down, an up, let's say, a down and an up and a down, some version of that in the future. It could look like that. It could look like this. Okay. It could even look like this. The thing is, not that, like, they're all predictions. Now you have to, a prediction isn't a guess. You have some sort of rationale. But now you have to recognize that one of your models is occurring and then take action. Because there's probably many ways that this could have occurred, right? Cool. So wouldn't that be nice? Could you be short here and now based on today's high? Yeah. Yep. Good. Is it going to work? Well, I don't know about that. But is that a strategic trade plan? Faux show. Cool. MoveOn.com. Euro. Still in my kill zone. Dropped off my right top. Let me move the bottom here. Okay. Okay. Nothing's changed. It's not trending. But look at what I have outlined in, right? Look at that. So it has stopped going up for now. Could this go all the way to 110 and then drop? Yeah, it could. But that's not what's in play now. What I'd like for it to do is drop below, 105, rally up, make a lower high, kick off 105 and drop down to 104. Game on. Coach, camera's off. I know, they ain't working, bro. I spent 15 or 20 minutes trying to get it to work. Maybe it's because I don't look good today. See, I don't look good today because I was contributing to the breakdown of the Christmas tree and putting the decorations away, and I jabbed myself in the eye. Oh my God, I scratched my eyeball. Oh, even now, oh my God. I just winked really hard and that hurt. Hang on. So anyways, I don't look so good. I got poked in the eye. Yeah, oh, like serious, a bad one. And so maybe that's why my camera don't work, because I don't look good. Okay, the UK is closed today. So it's very weak. Thank you, Darko. Hey, Darko, are you grid trading on me? Kiwi yen, kiwi yen, kiwi yen, kiwi yen, kiwi yen. CAD yen, CAD yen, CAD yen, CAD yen, CAD yen, CAD yen. No. I don't remember that being in the training course. No, no, no. No. All right. No. That'll get you thrown out of the game. Just, you got to be careful. You got to be careful, and this is a message to everyone. When you present your track record to a potential investor, you have to understand they want to say no. Because they've seen so many stupid traders doing idiot-style trading that they've become, like, not even accustomed, but callous to it. They're like, here's another stupid frickin' retail frickin' Forex trader, okay? And in their mind, there's a 99.99% chance they're going to say no. So, like, the scrutiny is high. And you hand them the track record. Yes, you're a profitable trader, but then they're like, oh, it's a grid trader, fail. And you're out. Gone. A grid trader, done. You just done. It's just over. No, it doesn't matter. It doesn't matter. You're a grid trader in their eyes, and it's dead. And you're like, no, I only do. No, it's over. You got less than 1 second. You have to be, your track record, yes, you have to be profitable, but all professionals are profitable. Like, that's not a big deal. You have to have a good Sharpe ratio to even get them to kind of look at it. And then, like I was saying, and I think we did this a couple of weeks ago in the swing trading group, that your trading itself, your winners and your losers, should be beautiful. Something they've never seen before, and something that's beautiful. Okay? And so I'm trying to get you to not deviate from that. Yeah. So I know you're doing it to make money, and you're making money. You're doing really good. But you still may be uninvestable. Because you got to think of this way. Like, I can just give some other professional investor money. So you got to compete. You're competing with everyone. You're competing with apartment buildings. So it's just too easy to go in there and say, and just see grid trading. And, sophisticated investors see it all the time. I mean, just see it all the time. And what happens with grid traders is they do really, really well, and then they do really, really poorly. And what's happening is, and so for everyone, and I'm not saying Darko's doing this, but a grid trader would take, let's say, 10 small trades on the same pair. Okay, but that's one standard lot, no matter how you want to look at it. No, it's 10 individual trades. Well, not if you take 10 losses in a row because it was a bad setup. That's going to be, let's say, 25 pips times 10. So it's still it's the same amount of risk. But very often, investors will see it as the trader's trying to hide it. And then you get this idea where you got 10 winning trades. So you're like, okay, so let's say they're all good. Yeah, but very often, because you're treating them as individual trades, you take some with tiny bit of a winner, and then a medium bit of a winner, and then a bigger winner, and then all of a sudden break-even winners, and all this kind of stuff. What happens is you end up throwing out your good, not risk management, but good profit management. And you're focusing on an aggregate, but not on the potential. So, it would make more sense, I guess, if you still treated them normally. Like, let's say they all have 30 pip stops and they all have 100 pip limits. But then it's just one standard lot instead of a bunch of 10 minis, right? So you got to be careful. Right? My base is the understanding of algo programming. No, you could program that algorithmically and it's still stupid. Okay. I'm telling you, they're very profitable when they're very profitable, and they're not profitable when they're very not profitable when they're not profitable. And investors look at it like you're trying to hide the true risk from them. So you got to be careful of what it's saying to potential investors. That's all. All right, cool. Let's do gold. We'll do some gold. Okay. And so I'm wondering here, and again, this is from last week, what we looked at. The goal for this week, which we set last week, that's what the swing trading group does. We set things up in advance. And what we're thinking is, what if gold does this next? Okay, this would be in a disinflationary world. So if you think the S&P 500 would be down, let's say just January, you have to make a call. Is it going to be up in January or down in January? If you said down in January, then gold will probably be down too. Okay. Darko says it's just one strategy, and I know it's not the best. Well, right? Well, you either take my advice or you don't. You either have, like I said, if you showed an investor that you had 1,000 trades and all your winners were negative 100 and all your winners were plus 300, you would have no problem raising money. It'd be one of the most beautiful track records they've ever seen. They'd look at it and go, oh my God, you're consistent, you have control, right? And I mean, and that's it. So all your losers and all your winners look like that. Okay, now maybe in between you got a ton, okay, of break-evens. So we'll call this break-even. And by break-even, for me, it's -3. So now you got, let's say this represents, what, 70%? And this represents 30%. So you have 70% losers or break-evens. Okay. And so what does this average end up being? Well, it depends on how many, but let's just say this could end up dropping closer to -50. So half your trades are -3, half your trades are -100, and all your winners are plus 300. So your Sharpe is going to be awesome. Okay. Your risk, right? Your reward is going to be awesome. Your consistency is going to be awesome, right? Your absolute profit is going to be great. And you would just and the psychology of it, like you're a freaking machine. Yes, you make mistakes 35% of the time. You know how to get out of a loss before it's a big loser, and you see that 35% of the time, right? So, right, 35% are losses, 35% are break even. So you got proper risk management. On top of that, psychologically, on top of all the numbers, someone's going to read into it like you have control, you have consistency, your math all works out, it looks good, you know how to take a loss, and you also know how to let your winners run. And you're like, dude, it's beautiful. But see, and Darko, you're like, yeah, I know you're up. Yeah, I know you're up 5%, almost 6 this month. Great. Doesn't make you investable. So I'm taking it to the next level. Every single professional trader in any market using any strategy, every single one of them is profitable. Nobody goes to raise money for a new fund when they've had an unprofitable year. You just got to ride it out and get back. So now you're not competing against retail traders. You got to understand that. So you're up 5% a month. Great. It could still suck. You still might be profitable, but you're not competitive against the other money trying to be raised. And so if you were up 5%, and let's say I'm up 3%, and you got a bunch of different strategies going on, one of them being grid, people will say no to you in less than 1 second flat. Well, no, it'll take 5 seconds. They'll look at it and go, grid, out. I mean, just out. And you're like, no, that's just one strategy. No, it's already over. You're done because they've said no to 99 others or 98 others. You're the 99th. You have right? You're profitable, but your Sharpe ratio is probably bad and a bunch of other things. But just psychologically, grid, dead. Then they look at mine. I'm only doing 3%. I'm doing half as much as you. But mine looks like this. Oh, they will invest the money unless they don't like me. But my numbers, psychologically, mathematically, are just vastly superior in the way that they're read, the story they tell, the consistency, the risk management, all that kind of stuff. Okay? And this is way more than enough anyways. For an institutional investor, it's way more than enough. Okay? So that's all. And and I'm not criticizing you, Darko. I'm speaking to you and everybody else. Yes, you need to get profitable. But isn't that the expectation for everyone? Like, that's not a prerequisite to be in the business. Like, I mean, it goes without saying. So you got to get to the profitability. But most people are taught wrong, and they practice wrong, and they never get there. So now that you obviously have great technical analysis skills and you're learning fundamentals, like you're definitely getting there, right, Darko? And you've crossed the barrier where profitability isn't the number one concern anymore. You know how to make money. And I've seen you do it, right? Okay, so that's great. So great. So now you can be up 10 or 20% for the year. Great. That's more than enough. Now you got to compete with someone else that has a similar absolute return. So now let's say an investor, and this is just how it works, by the way. You go to an investor and you're plus 20, and they're looking at another Forex trader. I'll even make it another Forex trader. They're plus 20. Who do they invest in? Or to make the conversation even more interesting, one trader's up 25% in absolute terms. So for the investor now, they have to choose. And how do they make that decision? Well, it starts mathematically, but it ends psychologically, how they make the choice. And by the way, this is basic finance. You do this in finance courses, like which let's say real estate project do you endeavor? Which one? And that's where internal rate of return comes in and stuff like that. So you want to take the better internal rate of return, but of course your goal isn't an internal rate of return. Your goal is absolute return. But then you could also do like, what is the internal rate of return? What is the Sharpe ratio? What is, because a Sharpe ratio will say for the amount of risk you took, which one's better. Now you might find, and this is what I'm trying to get to, for the amount of risk these two traders have taken, the dollar per risk is in many, many cases, these are the better numbers. Even though this trader made more absolute return, when they have a bad year, they'll have a worse return than this guy. So like this guy might be up 20% this year, and let's say is down 10% next year. This person's up 25% this year and down 15%. So you see you get the lower, there's more volatility, right? There's higher highs and lower lows. So therefore, a poor Sharpe ratio relative to this one. So dollar for dollar, you're better off with this trader. And so once you start understanding that math, and the reason it's important is you start trading to get the better math. But the better math is better trading. Okay? Yeah. So Darko, so if you're saying you bought an algo, I guess an EA, right? You got yourself an EA. I've seen millions of them. So if you keep doing that, you're going to kill your track record. No, you're going to go out and find amateur investors, and they're going to invest into you, and that's fine. And I hope it works out. But very often, that kind of stuff ends poorly for everybody. What's Gregors? What's going on, Gregors? Okay. Yeah, that's you acting like one. Yeah, but realize that that's not what people are looking for. People don't want that. So just be careful. Okay? Listen to me. Listen. Okay. Cool. My oh my WTI. There's an agency giving a course for brokers and financial advisors in Croatia. It's about 60 hours plus. Cool. Right on. Yeah, that's interesting. Yeah, do whatever you can. Like I was talking about this last week, I think. Anything you can do to borrow credibility. Yes. And I get that from like when I used to train high-tech founders of high-tech companies in the Silicon Valley. I used to teach them that where one of the prime focuses in the beginning is borrowing as much credibility as you possibly could. And I think it's the same, right? I think it's the same for currency traders, young emerging markets. You're a lot like a founder of a high-tech startup. So I've seen a lot of deals as a venture capitalist where the ideas are good. Let's just take that on face value. The business plan is good. The technology and market is good. Then you dig into the company now and find out they did things wrong. They incorporated their company wrong. They issued shares to investors, Like their uncle invested 10 grand. And so now the uncle's, got these weird shares and you didn't know what you're doing. So you valued the company at some weird valuation and all this stuff. Like entrepreneurs are so focused on getting going, even though they have no frickin' idea what they're doing. They just want to get going. I have a high-tech startup. I'm the president and CEO of my bullshit company. It's so funny how many say they're president and CEO. Why is that even relevant? It's your worthless company, right? And then they finally get going and they're ready to bring in a sophisticated investor and they've already screwed everything up. So it's just an easy pass. When do day trading classes commence? Well, now that you're back, Raymond, how about today? Today at 4 p.m. How about that? Okay, so anyways, so the story here, guys, is, be careful on your eagerness to get going. You need to get going right because you need to understand that to do this right and to build yourself into a professional investor, there's a lot going on and trading is the easiest. So just get profitable. But the next thing is you need to compete and you need to be structured properly, organized properly, all that kind of stuff. And if you push forward too fast, you come across as an obvious amateur because you would be an obvious amateur. And it's just off-putting. And it's very difficult to go back to the original people that kind of internally kind of laughed at you. And then you come back and you're like, no, I'm so much better now. And they're like, it's a pass, dude. And you just screwed up. So like with the young high-tech startups, I used to introduce them and bring them into like good accounting firms, good law firms, get their company and their shares and their cap tables organized properly. And hopefully you just have sort of a written, a document that your uncle lent you $10,000. I don't want to see some document that says your company, your uncle bought 10% of your company for $10,000 because now you've placed a valuation on their company and now it's a real problem. And you're like, well, Jesus criminy. So if it's just more like what you should do in that situation is your rich uncle lends you 10 grand, it's a convertible note. Do you understand that? It's a loan that converts to equity on some sort of conversion event. And the conversion event is probably not even an angel investor because the angel investor is going to be smart enough to say, I'm going to lend you $200,000 and it's going to be a convertible note sitting on the balance sheet of this corporation. And at a qualified conversion event, then we go through backwardation to calculate the value of the company at that time. And so then you finally get a sophisticated investor. Now they're going to invest $5 million. Okay. And then now that's the moment the company has gotten valued. How many shares did that venture capitalist get, that seed level venture capitalist get? From that, you can calculate what the valuation of that company was, but then you also get a pre-money, post-money valuation. And then you can go backward in time and do some discounting mechanism to say, well, that angel investor should have X number of shares on the cap table based on the later conversion event. And then you can go all the way back to the uncle that gave you 10 grand. Well, they should get a better price than the angel, and the angel got a better price than the VC. And then but the VC is the one that did the valuation calculation. You go all the way back. And all of a sudden it's easy peasy lemon squeezy. Your lawyers and accountants do that all the time. It's just, that's an easy structure. Oh my God, that's what happens every day. But if you're a venture capitalist and you're looking at 10,000 business plans for every one investment you make, and you come across a pretty decent idea, but the entrepreneur did it all themselves in the beginning without professional advice, and they just screw up their cap table, screw up all their valuations. It's just another one of the 10,000 passes. It's so easy to say no. Why should anybody take a risk on you? And you're like, well, but I have such a great track record of making money. But you're like, but you're uninvestable if you look at your track record, or if you look at how you've incorporated. Like many people, they want to have a Forex company, so they go online and pay $200 to get an LLC, and they're like, look at me, I'm incorporated. But none of the bylaws are structured for you to attempt to make profit or loss from the speculation in the foreign exchange market. So if you ever run into a liability issue, you're not actually protected. If you run into a taxation issue, your trading results, they might look at this grid trading and say, oh, you don't qualify for trader tax status. And therefore, you've been filing your taxes wrong. First of all, you've been filing your own taxes and you don't know how to file taxes, or you hired someone else to file taxes for you, but they don't understand there's not even code at the IRS, but they don't understand what you're doing as a foreign exchange trader, so they filed that wrong. And all of a sudden you're hit with massive tax liabilities, but also they look at your corporation and they're like, you don't have a Forex trading firm. You just have some off-the-shelf weird LLC meant for something completely different. So they just throw it out. They're just like, yeah, no. And all of a sudden you're like, what? So now you got a legal liability, a tax liability, and it's all because you did it yourself. And you got to be careful. You just got to be careful. You can ruin your own deal is what I'm trying to say. If you're going to be the founder of a massively successful hedge fund in the future, most people screw that up before they even get going. So be careful. Sky Killer says, so a good contract firm. Well, like my law firm, for example, specializes in finance and hedge funds. They specialize in international, right? The international side of it. Right? So imagine it's an LLC, but designed specifically to, let's say, provide managed account services to foreign exchange investors. But it may be offshore, and then you have an onshore company, an offshore company, and they all talk to each other. They all talk to the IRS. You're filing your filings properly. You're filing your taxes properly. You're in compliance with U.S. and international laws. There's a lot that goes on, and there's 99 problems that you could run into because you just didn't know. And let me tell you, the law and the regulators don't give a damn about you and whether you had good intentions or bad intentions. It's just simply deficiency and liability. So don't push forward too fast. You're going to ruin your opportunity. That's a message to everybody. What people want is consistency, but you also have to be structured properly. Okay? So I'm almost certain, and it could be in the next 3 or 4 months, that we could do that cruise together. I think Raymond was one of the guys that wanted to do this, where you meet me in Miami, we get on a boat. I'm going to train you on incorporating offshores, but also like the hedge fund industry and all that kind of stuff. Then we land in the Bahamas, and I'll have lawyers waiting. You sit down, you go through each person will go through their interview, get their packets where you're going to have to start filling out some basic information. And they can start the process of incorporating your business for you. And then we get back on the boat the next day, of course, after we have fun, cocktails and all that kind of stuff. Then the next day, as we come back, we can do some basic, analyzing what other hedge funds are pitching. We can look at their track records and how they organize their one-pagers. And so you'll learn about hedge funds going there. You can learn about how to present your own hedge fund on the way back. And I think it'd be like one complete package where you just pay money and I take care of the lawyer. I take care of the incorporation fees. I take care of your room, the food, the alcohol. You just show up, right? I think that would be fun. Coach, are you going to do a presentation on the super secret alert service? Yes, I am, in fact. Well, I have arranged for that, Sky Killer. I have arranged for that. We'll see. So, yeah, I think we should probably do that, let's say in the next 3 or 4 months, if you guys want to do that. I think there's only going to be about, I think for us to get a deal from the cruise, I think I need 16 people. That's a lot for people that want to be incorporated. But it also, I got to get the lawyers excited for meeting us in the Bahamas. So I'll have to, arrange for all of that. Sky Killer says, I'm not profitable right now. Yeah, but look, if you don't have much money, you don't have much money. But for some people that have decent money but are still not profitable, you may find, okay, so let's say you have a job, you have a rental property, and you have Forex. Okay, this, right, gives you a tax liability. Okay, this gives you a tax liability. And let's say over here you lost 25K. So you popped $100,000 into a trading account and it didn't work out this year. You lost 25K. You may be able to write this off in your taxes if you're incorporated. And if you're not incorporated, you might be able to, but there are a lot more rules. So for example, you might be able to, if you're not incorporated, let me think about the rule. You might be able to write off $5,000 a year over 5 years. But the thing is, you would have to track it, or whoever you would hire has to track that over the 5 years. And then in year 2, what if you made $25,000? Then you'd but are you still washing your losses from the year before? And it can become more and more complicated. And then year 3, you lose $25,000 again. And then so can you wash it? Can you not wash it? And how many years are you now washing? But anyways, you can see how that can get complicated. But again, I'm not your tax attorney, but I think what would happen is if you are an LLC incorporated properly with trader tax status, and you take a negative 25, you can write that off in 1 year. So you might owe taxes on sort of any profits you made on your rental or any gains that you made on your rental, plus you got your job. So let's say together you normally pay $100,000 in taxes. After all your write-offs and stuff, you're left with a $100,000 tax bill, but now you're able to knock that down to 75. And it's because you were incorporated. You see what I mean? So you're like, well, maybe I should be incorporated because it helps offset the taxes you're paying in other areas. You see what I mean? So for those that don't have a lot of money, it doesn't matter. But if you have a lot of money, even if you're losing a lot of money, because you have a lot of money, you're paying taxes other places, and it may be beneficial for you. Okay? So Sky Killer says, so what part of the journey? Whenever you're making or losing a lot of money, and you're like, well, what's a lot of money? Well, that depends on you. Okay? Okay? Okay, so if you're making or losing a lot of money, you need to get to the next step. Right. So 2,500 is a lot of money. Compliance in the United States to be licensed and registered as a Forex trader could be $300,000 a year. That's not your costs per se. Your lawyers, your accountants, your compliance people on top of that. But let's say you can squeeze all that in there. So let's say your break-even cost of being a professional Forex trader in the United States, let's say it's $300,000 a month or $300,000 a year. Okay? Plus, you have your net capital, capital requirements. Do you guys know what that is? This will be important if you want to manage other people's money, be licensed and registered in the United States. Okay? You could spend $300,000 a year. Now, some years it might only be $125,000, and then the next year you get audited and it's $400,000. You see, so it just you over periods of time you should have that kind of set aside. But do you know what this is? Well, Greg, as a Forex trader, expenses are almost zero. Well, your compliance firm, your law firm, your accounting firm, your computers, your internet, subscription FX bootcamp, costs of travel to conferences, that kind of stuff. Okay. So nobody knows what the net capital is. So to be a professional Forex firm, okay, these are costs. Let's say they're expenses / expenses. Okay. For things like your compliance, your professional membership to the National Futures Association, that kind of stuff, right? The net capital requirement is if you are going to be a trading firm, okay? Imagine inside your Forex account, you have $65,000 of your money, okay? That you have the $65,000 in perpetuity. You have a minimum of $65,000. That's your net capital, and it's a requirement. So when we're talking about like a lot of money, right, Sky Killer, you might have a situation where you should 300,000. Like I said, some years it might be 100,000. Another year might be 400,000. But you should have that right? There, because you will get audited. And I can even help you through your first audit. I can even tell you when your first audit's going to be. But anyways, and then your net cap requirement has to be there where that money is there. It's yours. You can never spend it. You can never, right? You can never spend it. It's a requirement. Now, I asked them, I said, what's that for? And by them, I mean the National Futures Association. And they said to protect the client. And I said, oh, that's really good. How does that protect the client? Okay. Now they're treating you like you're FTX or something. And it's really weird because in that situation, right, like as a managed futures trader, not a pooled fund, okay, you're a CTA in a managed futures structure. There's no need for any of this. It doesn't make any sense, but it's still a requirement. Okay. So, you should have, let's say, your first year, what do you think would be about right? 200,000? Okay. So you start with 135,000 in expected expenses your first year. They're not, right? You're going to get audited in your first year, but it's an easy one. It's an easy one. It's a one-day audit. And it's really a warning shot. They're there just to educate you that they can kick your ass at any time. And they want to make sure you're in alignment. So they do it fairly quickly. But your net cap is your net cap. You can't take $1 of client money unless you got your net cap in there, right? You have to report this quarterly, annually, and then you have to have once a year your finances as well as your trading to be audited by an outside firm. So that's how these expenses go up. So let's say you hire Ernst & Young or some name like that, and they charge you 20 grand to do a quick audit of your, of your fund. And so all of a sudden now it's 150,000, 155. But then you get to talk to your potential investors and you say, well, my auditor is Ernst & Young. And they're like, really? That's a big name. You're like, yeah, I only work with the best service providers. And they're like, we like that. Okay. Okay. But then if there's a deficiency along the way, maybe because of what happens during your first audit, then they say, well, you need to then report monthly for a while, like a year. And then I've even had the NFA go back and say, you have to do reports for every day and intraday. And that gets now this is where it goes up to, 350,000 because now you have to have Ernst & Young or whoever's your auditor to go back and do these calculations, not quarter by quarter, not even month by month or week by week, but day by day. And that is crazy amount of work, right? So anyways, that's how it could suddenly go from 135,000 a year to 335,000 a year, depending on what happens, all of this. So, so if you have a good service provider, it makes you look good because then it means your numbers are trustworthy. Okay. Now, Greg says, like almost all businesses, right? You keep your expenses minimum to maximize profit. For sure. For sure. Okay. So going back to Sky Killer, if you need to, let's say, have a couple of $100,000 a year in expenses related to compliance, compliance requirements, legal requirements, stuff like that, and you're making $900 a month, you're probably not there yet. You probably don't need to incorporate, well, let's say even if you just incorporate, you have to then say, well, how much are you going to save in taxes? So maybe it only costs $2 or $3 grand, let's say, for you to get incorporated properly in Portugal. I don't know anything about Portugal. Then maybe it's 2 or 3 grand. Maybe it's 5 or 6 grand. But if that saves you 135 euros a year, you're probably not ready. So it's just math. You're ready when you need it. But in America, the way it's structured, it's so fantastic that it might very quickly be advantageous even if you're losing money. But once again, only if you have money. There's very few laws in America that benefit poor people. If you don't have a lot of money, there just isn't a lot of loopholes. Right? Just isn't. Okay? So I was told early on that there are 2 types of taxation systems in the United States. One for poor people and the other for businesses. So if you have money, you don't have income, you don't have a job, you own assets that appreciate. Okay? You see what I mean? You have assets that appreciate. You own stuff. Now, there might be income through distributions. There might be income through dividends. Okay? There might be income from interest earned. But that's different from a job. Okay? And people with jobs pay a lot of taxes. And of course, when you look at it proportionally, when you don't have a lot of money, but you pay the same gas tax, you pay the same tax on your food, you pay the same tax when you buy clothes. So one guy makes $1 million a year, the other guy makes $50,000 a year, but you pay the same taxes on putting gasoline into your vehicle. So proportionally, the guy that makes $1 million, yeah, he's pissed off he had to pay 42 cents a gallon in tax. But it hurts the person making 50,000 a heck of a lot more, doesn't it? So, right? But meanwhile, I showed you the other day, for example, how I bought a brand new BMW from BMW, and by the time it's all said and done, I'll probably make $25,000 profit. And it's just because I play the money game. But guess what's required to play the money game? You got to have some money. So it's just, that's how it all works out. This is how life works out. So how do you get money? And the only way that I know without robbing banks or prostitution, right? How do you do it without guns or keeping your, or how do you do it keeping your clothes on? Deferring your pleasure. There's going to be years where you pay yourself nothing. Okay? When I ran my startups in the Silicon Valley, I went years paying myself $2,000 a month. Years of living in a tiny, tiny apartment. Right? Years walking to work. My friends are making $100,000, $200,000, $300,000, $400,000 a year. My friends who I knew in college, we're all kids together. They're making $400,000 a year, and I'm paying myself $2,000 a month. Putting in my time, paying my dues, reinvesting everything back into the business, deferring my pleasure, deferring my pleasure, deferring my pleasure. And it's still the secret to success. Compound interest. Okay? Sky Killer says, what? How much money a year? Well, you have to just do the math. Okay, look at the math. So let's call all the regulators or talk to an attorney that specializes in financial investing. Sky Killer, contact a lawyer in Portugal that can help you set up a hedge fund. They'll probably give you a free consultation, almost certainly, or at least that's how it works in America. And then you find out what? Let's say you need 100,000 euros a year. Okay? Right? Let's just say that. And you need a licensed, you need a corporation, but then you need service providers. And I don't know if you're trading other people's money, but when you do that, you'll need to be licensed and registered. There'll probably be auditing and compliance that needs to be done. I hired a compliance firm. Now they still screwed it up. So I spent a lot of money on a compliance firm. They still screwed up my compliance. But nonetheless, I hired a firm. You could do it yourself. Okay, but that just raises your expenses. But let's say you need 100,000 euros. And then you say, okay, you're going to charge your investors a 20% performance fee. And because you have no track record, no management fee. This might even be 15%, 10% in your year, 10-0 in your first year because you don't have any investors, right? So now you're like, okay, so how much money do you need? And by the way, if you can't do this, you're going to be in trouble. If you can't do this kind of level of math, you're going to be in trouble. But how much money do you need to manage? What's your AUM? Okay. Okay. If you collected 20% of the profits, how much money do you need to manage to break even, to get to break even? This is a typical financial problem. How much do you need to get to break even? And then when you say, well, what is your average, right? Average return. How much do you expect? Now, hopefully you have a track record of some sort because your investors are doing this kind of math in reverse. Okay. So you're like, well, I believe I can make 20% a year or 10% a year. You make up your number. And then you get to keep 20% of the 20%, and you need a minimum of $100,000 before you even pay yourself. Okay? Or you ask a different question. The benefits of incorporating if you trade your own money. Personal. That's supposed to be a P. Personal fund. So this is a nice way when you talk to people, you can tell them that you manage. Okay. Your family office. KJ or XJ says, I'm a lawyer. They don't cost that much for regulatory compliance. Well, so what I was saying, and maybe you missed it earlier, it doesn't cost that much until it costs that much. So in year one, you will be audited. I think you would agree. Everybody I know that's licensed and registered gets audited in their first year, but it's like I said before, it's an easy audit. They're in and out in one day. It's just a warning shot. But let's say in year 3, year 4, you get a serious audit, and it lasts 2 weeks. And like I said, in a normal year, I was doing, I think it was quarterly, annual, and then there was an outside annual audit. Okay, that's a normal year. So there's expenses to that, especially the outside audit, because your bookkeeper, let's say a bookkeeper was doing it for you, not an accountant. A bookkeeper's cheaper. So your bookkeeper's doing your quarterly and your annual, but then your bookkeeper passes the books to Ernst & Young. Well, dude, there's fees to all of that. Is it $100,000? No. But then you go through an audit, and the auditors are on site, and one of the things they ask you for is they want this quarterly to be broken down by monthly. So now you got to have your bookkeeper either do it all, or they might want the outside firm to do it. Let's say your bookkeeper has it. So you tell your bookkeeper, okay, so let's say for your net cap requirement. Remember, there doesn't even have to be a logical reason for them to ask for it. They can ask for anything. So they're like, okay, we want to check the net cap situation. And we want you to go back 3 years and give us these quarterly results monthly. Well, dude, yeah. And now you got to interrupt your bookkeeper, like ignore everything else you're doing and work on my thing and calculate going back 3 years, month over month over month. Okay. And then they're like, okay, great. You got that. And then a couple of days passes. And then they're like, we want to see all your expenses. Not trading, not net cap, but we want to see an expense report, and every single, and this happened to me, every single credit card statement going back 3 years. We also want all your bank accounts, every single transaction going back 3 years. So you call up the bookkeeper. Right? Right. And so, yeah, XJ now agrees with her, right? I don't know if you're disagreeing, but yeah, they don't cost that much until they cost that much. Okay. Also, later on, I had an investor or potential investor. They ended up saying no, but one of the things they wanted was the track record. Okay, so what happens? Okay, you pass them a track record, and what does it say? January, February, March, April, May, June, July, August, Sep, Oct, November, Dec, right? And what does it say? 2, 3, 1, -1, 1, -1, 2, 5, -1, 5, 6. You ended strong. Okay? So they see all of this. And this investor in London, they were a very large investor actually, and they said, look, this is fine, but we need to see it broken down daily. Why? Maybe they want to make sure I'm not a grid trader. Maybe they want to make sure I'm not a martingale trader. They want to understand the numbers. Do you understand? This isn't good enough. There could be all kinds of bullshit inside of this. They don't care that I got 5% in August. They want to know how I got 5% in August. So they're like, okay, this is great. We're talking to you. Great. And we need it by Monday. So what do I do? So you call your bookkeeper. This actually happened to me. Bookkeeper. Okay. Bookkeeper. Because they're cheaper than an accountant. And they're cheaper than a tax attorney, an accounting attorney, all that kind of stuff. So your cheapest bet here is your bookkeeper, which will earn what, $35 to $50 an hour. So you call up your bookkeeper and you say, I need you to work all weekend breaking down every month for 3 years into daily return. Here's the 75,000 trades I've made over the last 3 years. Okay, how much do you pay? How much are you going to pay this person to work all weekend going back through your track record and calculating daily rolling returns? Okay, this is just the process of due diligence. But think about it. This is what an informed investor would do, wouldn't they? So like, this ain't good enough. Your return is not enough. You have to trade properly. And will this require some money? Well, it takes money to lose money. Okay. And then who's going to write your DDoc? I think mine is like 80 pages. Who's going to write your AML? Who's going to write your disaster recovery plan? Okay. And these get audited. Okay. So there you go. So yeah, you better make money for sure. Mr. Kennedy says if they know how. Who says they know how? You also have to understand, Mr. Kennedy, there's more money there's more money out there than you can imagine. And the reason there's income inequality in a country like America is eventually the free money that the Biden administration gave out to because of COVID, the $5 trillion, it will eventually lead all to wealthy people. Poor people have already spent it. So again, I think it was the CEO of Bank of America said that looking at their accounts, they looked at people that had less than 5,000 in their account. 5,000. Okay. So they don't even have $5,000 in their account. And then suddenly they had more than $5,000 in their account. This is the CEO of Bank of America. Okay. So he saw this, and it was because of the stimulus checks. And then during this interview, he said the vast majority, almost all people that went from less than 5,000 to more than 5,000 are back to less than 5,000. And the vast majority of it went to food and beverage. So I chuckled. I said they went to the bar and the casino and the strip club. And that money is now gone. But where does the money go? It doesn't go anywhere. You know, when you drink water from your faucet in your kitchen, you're drinking dinosaur urine. It's the same liquid being recycled through the atmosphere. It goes up into the sky, becomes clouds, and then it rains, and it goes into the lakes and the rivers that we're used to. Don't go chasing waterfalls, right? But there is a certain amount of money in our economy. So eventually, it goes to food and beverage, But who owns the restaurant? I might own the restaurant. I might own it. I might own the real estate it's built on. I might own stock in the company. I might lend the company money in the form of a bond. But that money eventually goes to people that own. And the people that got free money and went to the bar, they literally pissed it away. Okay? So eventually that money is going to go somewhere. And what I'm trying to get to is that money needs to be deployed. Okay? Okay? And that money is out there. So Mr. Kennedy, someone's going to need you to manage it for them. Okay? The problem isn't money. Okay? Wealthy people, institutions, and businesses have way too much money. Money is not the problem. Now, if you're poor, money is the number one problem. But that quickly goes away. It really does. You don't need a lot of money in this world. Okay? So the next biggest problem is there's a massive shortage of talent. Even in the world of professional traders, most of them suck. I really do know many investors or traders or money managers, whatever you want to call them, that manage way more than 100 million. And many of them are not very good. They can't even do the basic math that I teach you. So, right? There's a massive shortage of talent. The reason there's inflation is there's way too much money, right, Mr. Kennedy? There's way too much money, and there's a massive shortage of talent. Okay? XJ says, now don't forget the years of zero interest rate policy and quantitative easing. Well, that's credit. So yeah, you get that through deleveraging. It's credit, but it's not really money. So none of that, zero interest rates and quantitative easing did not create inflation. We had it for 10 years with zero inflation. Japan had it for 30 years with zero inflation. So yes, that is abnormal and it creates bubbles and it creates other problems, but it didn't create inflation. Okay, the world decided to give money away for free and we almost instantly had rampant inflation around the world. But look, any socialist country has already done all of this experiment. Go talk to Argentina, right? For example, how do they get 2,000% inflation or 200% inflation a year? Well, the same way the United States got 10% inflation. It's just easy. It's bullshit money. If I had my webcam open, I'd show you again. But I right next to my desk, I have some bullshit money where the U.S. government decided instead of using silver to make coins, they decided to use spent bullet casings from the war to make money. So how do you make money worthless? Well, you start making out of garbage. You're like, we have trillions of spent casings. We could just dump it in a landfill or we can make money. Well, see, you're not supposed to be able to make money easily. That's why we use precious metals, because if you wanted to make more pennies and dimes and nickels or something, dimes, right, were made out of pure silver. So if you wanted to make more money, you needed more silver. Well, that sucks for a government because silver is expensive. Well, what if you made a dime or a penny out of garbage? Well, shit, we got a lot of garbage. It's practically free. Yeah, well, that's how you devalue your currency. You can make unlimited amounts of money because it's cheap. Well, money's not supposed to be cheap, right? Now, XJ says, yes, they are bank reserves, talking about like QE, for example, but eventually it gets out. Well, okay. Right? Now, here's the thing with bank reserves. They go to banks. And then banks are supposed to solve the asymmetric information challenge by investing the money into projects like a small business expanding their facility, or your neighbor buying a house or renovating their house. There's an improvement, right? So the key there, XJ, is that a bank gets credit from the Fed, and then the bank invests into a project with probable return on investment. So two things. Well, three things. One, it's credit. Two, it's an investment. And three, there's a return, which is deflationary, actually. Because if the person, gets a home line of credit, right, and a HELOC, a home equity line of credit, and puts new windows and doors and a new roof on their house, they're going to last 30 years, let's say, and it could push up the property value. There could be a return on that investment. Or if the small business expands, it will lower. So if they double production, they lower the cost by 30%, disinflationary, but they'll also need to hire local people. And so it's a good thing. It's a good thing is all I'm trying to say, XJ. It's a good thing. And because the focus is on credit and investment, there's a return. You get positive growth. You get lower inflation. So growth goes up, GDP goes up, and inflation goes down. So therefore, what the Fed did after 2008 did not create inflation because growth is higher than the return on investment, so to speak. Okay? And then what does the Fed do if suddenly we do show signs of too much growth? And yes, you can have too much growth. And I cover it in my macroeconomics course. But what does the Fed do? Okay? They reverse policy and they remove the credit. And all of a sudden, banks can't make the loans anymore. The bank can't lend to people or businesses. They have less credit to give. Remember, it's not money, it's credit. And therefore, they probably raise the standards for the little bit of credit they can give out. They need better borrowers. They need better businesses. They need better something. And credit is restricted. Therefore, growth is tamed. But we never have an inflationary problem. Never, ever have an inflationary problem. Because the whole thing is deflationary. Unless, of course, banks are doing a bad job. Well, that's why banks are supposed to fail. Now, we bailed our government, not the Fed. Our government bailed out the banks. So, well, now we're maybe left with banks that still do bad things. I don't know. So, but if you want inflation, you print money or you borrow money. In this case, what happened, the government didn't create money. The government sent everybody in America a credit card worth up to $10,000. Okay, that's the problem. That's the problem. And now the government has to pay the credit card bill. You see the problem there? Like, no joke. There's a $5 trillion credit card bill. And according to the CEO of Bank of America, most of it was pissed down the drain. I apologize for my frankness and my rude language, but your $5 trillion credit card bill went to food and beverage. Okay? Well, XJ, how long can they raise rates? The issue to me is not what the terminal rate is, but what happens when they realize raising rates won't lower inflation. I disagree with the solution that our federal government, and remember the Federal Reserve Bank is part of the government. They don't answer to the White House or politicians, but it's part of the government. So the solution is incorrect. I can succinctly explain exactly how to reduce our inflation and get it right back to where it was. Does anybody want to know how? I can give a 10-second solution. I can explain it in 10 seconds. Exactly what needs to happen to fix our current problem. And it's not raising interest rates. I'll tell you, but you have to pay me $1. Just joking. All right. Yeah, I made that joke before, and I should be careful. All right, forget it. I'll just tell you for free. How about that? Okay? The government needs to raise taxes, and the income from the taxes, 100% of the income from the tax increase must go directly to paying the credit card bill. And at the end of the process, I don't know if they want to do it in 1 year or 10 years. Okay, but 100% of the income has to go back to paying off the debt. So the federal government, in my estimation, needs to raise $5 trillion in taxes and pay down the debt. Kevin's like, well, we all know it's not going to happen. But, it's very, very simple. It's very, very simple. That is the solution. The other solution is for $5 trillion in assets to be destroyed. So let's say you are the problem. You don't want a tax increase. That's why the government won't do it, because you don't want to pay higher taxes. Okay, then you will lose your portion of $5 trillion by having the value of your house fall and the value of your retirement fall. You will pay your tax. You either pay it directly or indirectly. Now, I'd rather pay down the debt, because I'm not sure what happens. Do we lose the $5 trillion in value and still have a credit card debt? If you decide to go to Applebee's and get your bloomin' onion and 3 beers, and the next day your investment has gone to zero, you still have to pay your credit card bill, don't you? But nonetheless, it's going to happen. This economy, if we go back to normal levels of inflation, we will have to lose $5 trillion. Now, don't worry about it, because many of the assets were never worth what the market was pricing. Okay? So you might argue that Tesla is now down 60% from the high. Sounds terrible, except it was never worth. Tesla was never a $1 trillion company. It never was. You're like, well, if you take the outstanding shares and multiply it by the price, yeah, sure. But that's not what its intrinsic value was. That was the bullshit money. So if you got out at the top, good for you. But if you're like, oh my God, it's the end of the world, Tesla's now only a $350 million company, or sorry, $350 billion company, not a $1 trillion company, I'd say, well, it's probably not even worth $350 billion. So what do? You add up the assets minus the expenses, and then you multiply it by how many years? 20, 17, 15? You come out with a valuation, you're like, oh, well, Tesla probably should fall another 20%. It's probably only a $200 billion company. Cool. Well, if you're smart, you've already thought about that. And B, you've saved money because you knew the stock market was going to fall. And 3, you're going to buy it when you get somewhere around 13 times earnings. You're going to buy Tesla at probably 75% decline from the previous top, but the previous top was bullshit anyways. So now you're like, yeah, so you're going to do that and you're going to make money. Now, it might take you 5 or 10 years to make money, but you're going to make money. Why? Well, not only are you beautiful and have a charming personality, but you're just wicked smart. Okay? Gold hitting a resistance level? Okay. Then who's your leader here? S&P 500? I think there's an H in there, Kevin, but you got it. I think it's SMHAART. Wicked smart. So anyways, cool. Well, XJ agrees, and XJ's an attorney, and you know lawyers are never wrong. So listen to XJ if XJ agrees with me. Okay. And by the way, going back to XJ's question, how long can the Federal Reserve raise interest rates? I think the question is, how long will it take for the market to realize the Fed is not going to pivot in 2023? So let me say this differently. And by the way, I'm giving you the golden egg here, maybe even the goose. Okay, so listen up. This is really, really important. The market has priced in interest rate cuts by the end of the year. That the Fed is going to hit a plateau. So they're going to keep raising, probably at 25 basis points. Then they're going to stop raising. And then by the end of the year, they're going to cut interest rates. So let me be frank. They're wrong. They're stupid. They're guessing. They're hoping. It's bullshit. The math doesn't say that. The Fed doesn't say that. So that's everybody on TV and on radio, in the newspapers. This is smart money. Okay? Meaning they're institutional, but they guess just as much as retail does. In my humble opinion, and it doesn't sound humble, but I'm trying to show you that this is what the current facts say. I don't have an opinion. So when I see experts that are supposed to be institutional money, I can see inside their analysis that they are guessing, they're hoping, they're wishing. It's an opinion. And that's my problem with it. So when I analyze the facts, they are wrong. So going back to what's important, the $1 million question, when does the money, the big money, let's call it big money instead of smart money, when does the big money know that that hypothesis is wrong? That's the next trade. Because everything else is priced in. What's not priced in is them realizing they're wrong and they need to change their model. I need to be in the model right about that time. Right about that time. I don't want to be so arrogant that I'm trading against them. Okay? But I want to have the trade mentally and spiritually ready to go, so when the hammer falls and somebody at $1 billion hedge fund or ETF or pension fund goes, holy shit, they're not going to pivot. I'm already there, ready, willing, and able. And when the hammer falls and blood's in the street, and more importantly, this is where like hedge funds and pension funds come into play. If things get bad in 2023, and they just might, when do those investors get forced out of their trades? Like literal either panic or because of their own regulatory compliance, they must exit even at massive losses. What if the losses create more losses, which create more losses, which creates panic? Well, I'm going to make a lot of money. Okay? Okay. Now, Raymond says, never in a million years will they, we'll have to wait for normal rates until they get back to 2%. Well, the only way to do it is to destroy $5 trillion in value. But it could happen more quickly than that, though, Raymond, because what could happen is there's a slow decline, slow decline, slow decline, slow decline, slow decline crash. Okay, I've seen the stock market drop more than 10% in 5 minutes. Okay, and most people on Wall Street don't have that experience. They don't know what happens when a hedge fund is forced to drop $1 billion trade on the market. Now, usually a hedge fund that wants to make a big trade, well, they have to spread it out over a long time, over various accounts, and maybe there's hedging involved and, some sort of liquidity strategy. But when it's just like, sell everything, sell now, we have no choice. Well, what happens? Then that's bad for somebody else because there's a counterparty. And now the counterparty has to sell. It's not a good price. It's not a good time. It's not a good reason, but you have to anyways. And now they capitulate and they dump their billion and then another billion and then a billion. And it's literally happening in seconds. Yeah, dude, I've seen that many, many times. Have we had that this year? No. Is it likely to happen? I think so, actually. I think it's even likely. But what you don't understand is it's the solution. Somebody's got to lose the $5 trillion. Are we going to do it $10 billion at a time from a hedge fund collapsing? Are we going to do it $100 billion at a time from pension funds collapsing? Let's say the CalPERS, the California Teachers, right? Association Retirement Plan or whatever it is. Are they going to lose? Are they going to get liquidated? Like, who's going to lose? We have to lose the money. Or raise taxes and pay down the debt. I'd rather just raise taxes, pay down the debt. Hi, my name is Wayne McDonald. I'm the President of the United States. My predecessors, both Republican and Democrat, gave away free money to help the American public through an unprecedented global crisis, pandemic, possible zombie apocalypse. I get it. It happened. Now we all must pay the bitter price. You need to pay the money back. If you got free money, you need to pay it back. And here's how we're going to do it. We are raising taxes. And 100% of the money will go back to pay the debt, and you're not going to like paying the higher taxes, but it's better than being dead. And I can tell you, as President of the United States, I asked the Treasury, how many checks were returned? Thank you for the support, but we don't need it. Oh, none. So now pay it back, biatch. Or this whole thing's going down. So we either pay the debt back and we have a modest 5 years, and for 5 years we'll have modest growth and you will have modestly higher taxes. But at the end of it, we will have a healthier, stronger economy. And by paying back our debts, our friends are going to be very happy with us and we will remain a superpower. Or we collapse because nobody's got the guts to do what's right. And we live in a society of gutless, heartless, worthless people. Oh, that's strong. But that's unfortunately someone else is making the decision. We need to be able to pay it back. We borrowed the money when we needed it. Now you got to pay it back. But if we live in a culture of jacking up our credit cards and then defaulting, well, somebody gets screwed when you do that. You're like, it's just Visa. It's just Amex. They're okay. Well, no, they have investors. The money wasn't free. It goes somewhere. Someone loses. So we have to pay back our debt. It's the only way to do it. Or you hit the iceberg full steam ahead. If you're going to hit the iceberg, hit it hard. Sink it fast. Okay? Yeah, Greg's been gaslights for this. Yeah. 87 correction, yeah. You know, the interesting thing about that is the correction was so fast too, right? The drop and then that. But look, that's what we need to do. Now, XJ says we can't ask politicians to do that. But you know what? I think if we actually had strong leadership, and I haven't seen strong leadership in America for a long time, so I don't know. I don't know who would do this. But I think most Americans are smart enough. I think most Americans get it. I think most Americans have to balance their checkbooks with their salary and pay their rent and pay their phone bill and be conscientious when they're shopping for food and planning their vacations. I think most Americans are smart, intelligent, and try to do the right thing every single day. And it's hard to do this. I think very few abuse the system. Most people do the absolute best they possibly can. And I think if a parental figure, male or female, gets to the White House and says, look, we need to take care of our household finances the same that you do. And we need to pay down this debt. It's a prime focus for the next 4 years of my administration. So we can do some of it through austerity, but the problem with that is we have a very needy society. And austerity will contract GDP in a negative way, which will actually give us less output. So let's not do austerity. Let's make sure everyone keeps their job. Let's make sure the economy grows. Let's make sure that this is healthy, that we continue to focus on value creation and not saving money by destroying the economy. That's no way to save money. The best way to save money is make money and then not spend the excess. So let's do that. Let's focus on growing this economy with an entrepreneurial spirit where everybody, regardless of age, sex, race, or who they make love to, has an opportunity to contribute to society and for growth. But from that growth, just for 5 years, we are going to take a portion of that growth and pay down our debts so that we have a strong foundation to continue this entrepreneurialism in perpetuity. You know what? I think most Americans, regardless of Republican, Democrat, or some, libertarian, Green Party, whatever, I think most people would go for that. I think they would. Most people would go for that. I mean, look, I bet you I can get Bill Clinton and Obama on one side of me, and then I can get like let's say, would Trump be into that? Maybe. I can get the Small Business Administration on that, which is Republican, right? Or not the SBA. What's the other one? The Chamber of Commerce. Chamber of Commerce, I think, is very Republican, right? Small business. I can get small business. I'm sure I can get big business because, these organizations also have to pay their debts and manage their finances. Like, I think I could get both Republicans and Democrats on my side for that. I think I could get the libertarians on there. If I say, raise the gasoline tax, but keep green energy a focus, I could probably get the Green Party. Like, there's a way to do it right. But I think most people on this earth are sensible. See, I would appeal to the middle. Okay? There are some in America that thinks there should be no taxes. There should be no government. Well, that's pretty extreme. And then there's others like the government should raise your children for you and give you money for free. Okay, well, that's also extreme. I would appeal to the middle. Upper middle class and rich. Maybe not the 1%. Certainly not the bottom 10%. But I think everybody else. So I think it's just cowardice that I know we all joke about it like, forget it. There's no way a politician would go for it. It's because they're gutless. If you study history, you will find that is always the case, and it's always leads to the collapse of the economy and literally the reserve currency. So if there was a strong leader, they would say, we can't choose the easy way out. It is always the path to destruction. So we can't choose the easy way out. So let's control how we navigate a real social and national challenge. Hey, boom. You're like, oh my God, that's a leader. Yeah, that is a leader. But I can tell you, companies that don't have leaders go out of business. Well, XJ, once again, there's only right and there's only wrong. Okay? Now, that's why I like money. I like business. I like finance. I like economics. You can do the math, so to speak, and with pretty decent assurity, know what the right path is. Okay? Should you buy or should you rent? Should you buy? Should you lease? Should you buy 5 houses or 1 apartment building? Should you invest in a growth stock or defensive stock? Should you buy the bond market? Should you sell the bond market? They're all very, 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 very easy questions. It's just math. But of course, very, very, very few people do it. What boggles my mind is the amount of knowledge many people have about sports. They can go back generations, tell you about the 1967 Yankees. Okay? That kind of stuff, right? I saw, 5 million people in Buenos Aires pile into the street to meet their football team. The world champions. It's great. But they didn't do it because they're pissed off at the government for creating 200% inflation for generations. Destroying. Argentina was the 12th wealthiest country in the world. And now it's in extreme poverty and is a joke on the global economy. But it should be as rich as Canada. But nobody floods the streets for that. But instead, Messi scored a couple of goals. Yeah, good for him. Great. Beautiful game, by the way. Oh my God, it was amazing. But nobody, right? Nobody goes onto the streets for that, but they probably should have. I mean, I get mad. I'm like, okay, they won the World Cup, but they have 2,000% inflation. Like, gee whiz. How could they even afford to send the soccer team to Qatar to play soccer? Oh, well, they borrowed the money. Oh my God. That's, so I get frustrated because, look, I'm happy for Argentina. I have Argentine friends. I have lots of respect for the history of Argentina. I think they make beautiful wine, and they have wonderful horses, and they have wonderful mountains, and the land is so great. And, it's so great. It's so great. But it should be a million times better. And I wish that's what people were fired up about. Okay? So I know that's going to piss a lot of people off. I don't mean any offense or disrespect to anybody. I'm only saying it because I, let's say, respect Argentina. It should be on per capita GDP exactly the same as Canada. Now, Grind says social programming, that's the way they were. They were not like that before. Okay? Buenos Aires was the Paris of Latin America. It's a rich country, or should be a rich country, sophisticated country, blessed with natural resources and strong national pride, strong national history. Okay? It should be a financial power and a power of the arts. Like, again, great at soccer, right? Great at polo, mountains for skiing. I love Malbec and other Argentine wines. There's just so much. The country is so amazing. Yeah, but then it changed. Well, why can't we just change it back? If you had 5 million people in the square going, end the, how do you say it even? I don't even know. End whatever it is. End it. Like, they need a revolution. But whatever. Okay. Or Greg says, yeah, or play games, make no money, and yeah. France should have won the cup. Okay, maybe. All I know, XJ, is I watched that one game. And for almost all of it, Argentina was better. And then, I guess after a good old ass whooping, they decided halfway through the second half to like show up and play the game. I think it was halfway through the second half, they got their first shot on net. So you don't win games if you can't even take a shot. Yeah, but look, France was asleep. That's bullshit. You're not a world champion if you show up and you're like, well, I was really sleepy the first half. No, you're a loser. A winner should have just destroyed right from the beginning. And okay, great. And then they showed up and and they got a goal. Great. And then there was another sort of bad penalty and yep, now it's a tie game. Just like that in about 45 seconds. Yeah. So anyways, but well played. And then finally France was playing. Yeah. Hey, well, amazing game. But I don't think it should go to penalties. I think it should go to sudden death. Sudden death is what we do. I think actually they don't do it in hockey anymore either, right? It should be like there's 2 15-minute additional periods. You get a break in between. You get a new sub or something added. Great. And then you play to the death. Next goal wins. You put the ball in the net, it's the end of the game. Just like that. There's no time, no nothing. You play until you puke. You play until you die. This is the World Cup. Okay? Okay? And if they're that good, one team will die and the other one will score a goal. And that's how it should be. It should be like the last game on earth you ever play. Play till you die. Go. Yeah. But how about, you know what I also get pissed off, and I don't know why I'm on my diatribe today. I guess we're all just kind of looking at a slow market. But the guy on the French team that missed. What kind of bullshit is that? He missed. Like, wait. You don't... I understand the goalkeeper stopping your shot. Oh, I get that. It's hard. It's difficult. And the goalie's going to do whatever he can to stop you. That's his job. And there's a pretty reasonable probability he gets it. What is it? Probably 30%? But one of the players missed the entire net. I'm like, dude. Yeah, actually, I know it's uncommon, but like, that's not how you win the World Cup. I understand too, when someone passes you a ball, that's very difficult. You got to have your foot in the right direction. You got to have the right timing. It could go off, it could bounce a little bit, go off your foot and go 3 feet over. But a penalty shot, you don't miss. I mean, dude. It might not go in, but it should have a chance. When it never even had a chance, dude, sit on the bench. Let someone else take the shot. Like, dude, well, whatever. So I was looking at stocks here, and I'm just looking at like HK coming down. Okay, I'm looking at S&P still very bearish on this 4H. Okay, my projection's lower. Still looks okay. We're stalled out here, but it is a low volume day. Germany's quite down. Okay. Euro is kind of in between. It's on a smaller time frame here on a 15. Oh man, I told you I scratched my eye. Oh, it's burning. Ugh. See you later, grind. Oh, I don't know, actually. I would assume not. I don't know. No, I think he's given the time off. I'll do my session. Yeah. So we'll leave it at that. If you're in my day trading group, I will see you at 4. And then I'll do my Forex.Today webinar tomorrow. And then we'll do day trading again at 4. And then on Thursday, I will do my Forex.Today morning session. And then we will do the swing trading group. And then Friday, I don't know. Maybe, probably, I'll just do Forex.Today. That kind of thing. My thought too is the Friday after that is non-farm payrolls. So I think what I'm going to try to set up today is after non-farm payrolls, I'm going to get on a jet and I'm going to fly to Havana, Cuba. And I'm going to start writing my book on macroeconomics. The 2023 outlook, I think, is going to be more like the 3rd week of January. But I want to write my book. I need to get going. I need to do that. And it's better that I'm in Cuba when the markets are likely to be not full volume. And by the time I get back, I mean, dude, I got to be here, ready, willing, and able. So I think I'd just go like Friday to Tuesday. So I might miss 2 days or something. So I'd be back like by Wednesday after non-farm payrolls or something like that. I'll come back and I'll probably have my forward written, probably my table of contents written, that kind of stuff. So that's kind of what I'm thinking. I don't know what's actually going to go down, but that's what I'm thinking. So we're going to have a decent week as far as opportunities to get together. We don't know if there's going to be follow through, but remind yourself of that we're at 30% of normal volume today. Peanut Butter says, when you come back, will I do the presentation on the super secret fundamentally based alert service? I think I'll do it before then, probably next week, the first week of January. Okay. So there's lots to do, lots of interesting things to do. Life is great. Life is grand. Life is beautiful. Thank you for everything that you do, and I will see you shortly. I'm going to give an ad to YouTube. Make sure you subscribe, like, and leave a comment. And please leave a book review on Amazon for my book. The link is in the description below. Cheers.